what do you think about the effects of one big, beautiful bill? Now that we have it, and Stephen was obviously a huge part of creating that legislation, now that we have that certainty, and now that investors can calculate, put it into their models, is it a good thing?
Well, I think the clarity, as you just referenced, is really the important thing for portfolio managers and for corporations. Corporate executives thinking about capital spending decisions, dividend policies, things like that, all are enhanced when they have some clarity on what the policies are likely to be. So in that regard, the fact that it was passed means we can look forward and see what are some of the fundamentals. And the idea the economy is decelerating but still growing is an important backdrop. And the idea that the Fed is likely to be cutting interest rates 3 times, the Goldman Sachs economics forecast, 3 times starting in September, twice next year. That is an environment where bond yields are likely to also be lower. 10-year Treasury yields probably around the 4.2%. And that supports our forecast of around 22 times multiple for the S&P 500. So that valuation, which is current today, we think forward earnings growth 7%. That lifts the S&P 500, in our view, to 6,600 by the end of this year, 6,900, 6,900 by middle of 2026, or next 12 months. That's the general backdrop. Again, the clarity on policy is important. And now investors have moved beyond sort of this year, really beyond the tariff discussions. The view is it will be eventually resolved. And what's the general thrust of business?
You could make an argument that some of the market has already been looking beyond some of the current policies, trying to feel the impact of deregulation, lighter regulation. KBW Bank Index now up more than 12%. It's almost Super Bowl,
right,
aka bank earnings next week. And so that'll kick off. This earnings season will be really interesting to watch. Every single bank except one in the KBW Bank Index is up on the year. Have we seen the best it's going to get?
I think one important aspect to think about, we've had an incredible 25% rally in the last 90 days. A 25% rally in the S&P 500. It is a really, really narrow breadth market. It's really led by some of the largest companies in the market. That's fine. But the idea of the median stock, the typical company, is down 11%, 11% lower than its 52-week high. If you look at the mid-cap stocks, you look at the Russell 2000, these stocks are down basically 10%, or they're trading 10% lower than their on the 52-week high. As a consequence of that, the idea of some opportunities in these other sectors are where we are focusing our discussions with portfolio managers. The alternative within the financial sector, banks have had a terrific rally, as you just referenced, a lot of dividend increases once the CCAR results came out. And so what are some of the areas within the financial community that have lagged relative to our model? And the alternative asset managers are certainly one category that we focus on.